Hey guys, welcome back to another episode of the Flailing Forward podcast. I am your host, Dustin Seiler. This is the podcast where we talk about how things might be a little bit messy. They might not be the most pretty, but if you're flailing forward, you're still moving, you're taking those steps, you're making action, and you're getting ahead in life. And I am joined today by probably one of our best named guests, Dustin Geroski. Dustin is a Sub 2 Co-Living 101 and 201 semester instructor. He's a licensed agent in Florida. He's got a master's in finance from NSU, and he is a member of Owners Club, Gator, and Sub 2, who is focused on expanding his real estate portfolio through co-living properties while creating high quality, affordable housing for future generations, which everybody knows is a huge need at this time. If you guys are looking to invest in co-living properties, he can help you identify good opportunities, and also help you learn along the way. His team also specializes in capital raising. They've raised over $2 million for their project so far. So if you want to work with them, you can also deploy your money and put that to work as well. So we're going to have a great chat today. And then if you guys are interested in working with Dustin and his team, make sure that you catch the information at the end on how to contact him and reach out to him. But Dustin, thanks for being with me today, man. I appreciate it.
Yeah, thanks for having me.
Awesome. So I know we just went through this whole thing about you being a co-living expert and really focusing on that right now, but that's not where your real estate investing journey started, right?
Right, right. Yeah, so I mean, I jumped into real estate uh about 3.5 years ago now.
Okay. 3.5 years ago. And so right during COVID.
Yeah, it was after I've always had a strong interest in finance. Like I've studied like in my master's I studied monetary policy, studied the stock market pretty closely, like from an analyst perspective, did some consulting in
Hmm.
addition to being an analyst. And yeah, the rules that I saw like in that world, they applied also in real estate, but I quickly realized it was 100 times better because it's like, all right, you put 100 grand in the stock market, you get 10%. That's the average, actually like 8 or 9, but
Yeah.
you put 100 grand in real estate, the outcome is significantly different over the course of the decade.
Right. Maybe
Yeah,
can you just explain that to people a little bit? Why is real estate so much better than the stock market as far as that long-term benefit?
yeah. So the, before, so kind of going back 10 years ago, I I was actually in chiropractic school 10 years ago, and I
Okay.
promise
It
this all connects.
took a hard right turn on that one.
Yep. So this all connects. But that was really hard. Basically like pre-med or
Hmm.
med, depending on who you ask. But I'm working on the cadavers, all that stuff. But I quickly realized through that I liked it, but I liked business a lot more. I didn't want to work in the business. I wanted to own the business.
Yeah.
And so then I started studying, going down the route of like, all right, being a financial advisor, Edward Jones, Wells Fargo, like that. And so I saw the stock market and I was like, okay, this is what vast majority of people are looking at to retire.
Yep.
And so I spent years just digging and digging into it. Had a couple mentors that helped that dramatically. And if I were to boil it all down to one thing, I'd call it propaganda.
Okay.
Everyone's told to go put their money in the stock market, but it's not the best thing.
Yeah.
It can be ultra safe if you just park your money in the S&P 500, but it's not going to help you retire early by any means.
Right.
And so what I saw was you like that 100K example, you put it in the S&P and it'll make like 8, 9, 10% a year based on historical data.
Hmm.
But you take that 100 grand and you put it on maybe a down payment on a house that's worth maybe 4 or 500,000. Over the course of 10 years, that house is probably gonna like probably double in value. And so you're gonna have probably 700K in equity. There's some debt pay down along the way. Call it 600K in equity. But that S&P 500, that 100K, it may be doubled. So
Yeah.
instead of 100 grand, you have 200 grand.
Right.
So there's like this massive gap. And then the most common like rebuttal I hear against real estate is like, I don't want to manage tenants. So it's like, well, you don't have to. Just hire a good property manager.
Yeah.
And
Yeah.
so once I started seeing all that, I was like, I'm not touching the stock market ever again. And
Right.
I had gone deep into it. Like futures, futures, options, all the derivatives, the bond market. Like I dissected all of it as much as I could.
Yeah.
And yeah.
Man, there's nothing like the leverage that you can get in real estate where you can come in with a much lower down payment. Like you said, you're putting all of your money in, whatever you're putting, that 100,000, it all goes into the stock market and you get $100,000 worth of stocks. But in real estate, that $100,000 gets you a $600,000 house, like you said, and or a $500,000 house. And that leverage, I mean, is just huge. I don't think
Mhm.
there's any other place you can find leverage like that other than real estate. But it sounds like you had this great kind of analytic sense of things of how to look at, if you're analyzing the market and you're diving into all of that, you're able to analyze kind of trends and things that are coming up. And it sounds like that played just right into looking at deals in real estate and figuring out what was and wasn't a good deal.
Yeah. Yeah, and the biggest takeaway was that clicked for me was when I realized, like, technically in my master's in finance, I studied monetary policy.
Hmm.
So like all everyone they spend, 8, 10 hours a day working to get a dollar, but most people don't know what a dollar actually is. Like where does it come from? Who decides how many we have? Like all this stuff. So
Yeah.
I dove into it and I realized, okay, we have inflation. They print money, especially during COVID, 2009, all
Mhm.
the way back to 1929, the Great Depression, and they just print it. It's not
Yeah.
backed by gold anymore. And so the reason I mentioned that is I realized that influenced the stock market, but it really influenced the real estate market. Like when you look at what happened with COVID.
Yeah.
And so I just looked at it as opportunity cost. It's like, all right, I could put all my hard-earned dollars here in the stock market and just work for 30, 40 years. Or I could, like you said, learn how to find a good real estate property and I could park my money there. And yeah, it's like apples and lasagna. It's not even apples and oranges. It's like two different food groups.
Yeah, absolutely. Monetary policy is fascinating, the way they print money, like you were talking about. And that's something we're hearing a lot of even today of, are we going to just start printing a bunch of money to kind of fix things today? I mean, that's just a constant cycle that we go through. And if your money's sitting in the bank, it's not a dollar today is not going to be the same worth as a dollar a month or 2 months a year from now.
Hmm.
If you put it into an asset like a house, that
Hmm.
dollar's going up in value instead of sitting in your bank and going down in value, which is great.
Yeah. So like inflation is your friend when you own the true hard tangible assets.
Yeah. Yeah, amazing. So when you made the transition into real estate, did you start off just buying houses or how did that transition happen for you?
Yeah, so I had a friend from church actually that pulled me into the real estate world, and he had already retired at age 31 from real estate in Utah. He had like
Okay.
government contracts, assisted living, and so he's 40 when he pulled me in. He's like, I want to start buying again. Let's do this. So
Dang, I want to be friends with this guy. He's got good
yeah,
knowledge.
he'll be in Miami, or he lives in Miami a couple weeks.
Nice.
So yeah, what we did was the goal always has been buying.
Hmm.
And then I have done a lot of wholesale, but that was always like secondary focus. And so it's always been in harmony together in conjunction of doing both. So
Hmm.
the first deal we bought and the first wholesale deal, they happened in the same week, about 4 or 5 months in after like officially diving into real estate.
Hmm.
And so the wholesale deal is just a byproduct of we were looking near Orlando Disney.
Hmm.
And it was like, all right, we kind of want to buy this, but it doesn't quite fit it. And the seller was open to selling it on creative and everything. And I was like, we're not gonna buy it, but I could probably find a buyer.
Yeah.
So yeah, in the same week we bought a deal and wholesaled the first deal.
That's awesome. So you were out specifically looking to buy. You weren't out looking to work as a wholesaler. You were trying to find properties to buy, but then you found this property that didn't fit your buy box and the light said, "Well, hey man, I can move that." And you kind of became an accidental wholesaler on that deal. Is that right?
Yeah, and I think it's always when I was wholesaling it, that was always my edge, was my intent has always been buying.
Yeah.
And then if it didn't fit, I would just tell the seller, be like, yeah, this doesn't fit, but I probably have someone that will buy it.
Yeah.
So it's always very just like transparent with them.
Right. Right. Which brings you in to the deal as from a position of strength because people get leery about wholesaling sometimes and they think, that if you present yourself as a buyer and then you turn out to be a wholesaler, people kind of get rubbed the wrong way sometimes just because of whatever
Mhm.
the idea is about wholesalers. But if you come in as a legit buyer and then you're honest with them up front and say, hey, this doesn't work for what I'm doing, but I can help you move it, I think that builds a level of respect with people.
Yeah, I mean it definitely helped just having that because I started small with documenting the properties that we were buying on social media, but I always did document to a degree, and I would just show the agents, be like, "Hey, like this is what I'm buying. Here's the buy box. Your property doesn't fit it, but I
Yeah.
can help."
Yeah. Nice. Okay. How'd you find your buyer for that first wholesale deal?
I just posted it in sub two actually, in the Facebook group. I didn't even have it under contract. The seller, we found out we had a mutual friend from church, and it was a straight up handshake deal, no contract, nothing. And I treated it more as an experiment. I was like, I'm just gonna see what happens. If he burns me, he burns me.
Yeah.
But I posted it. It was a really nice Airbnb, 20 minutes from Disney. And then yeah, I just stayed in touch. And then he sent me the money like 2 weeks after closing. So it was
Oh,
a virtual
wow.
handshake deal.
I would guess you probably wouldn't recommend that everybody does a deal that way.
No, no, but I was so new. I was like, even if I didn't get paid, but I saw the result that I can find a buyer and just
Yeah.
connect people virtually and make money. I was like, even if I don't get paid, the lesson was totally worth it.
Yeah. For
Like
you,
it was a paradigm shift.
right. And for you, the majority of the value was in the experience, not necessarily the check at the end of the day. Is that right?
Yeah, yeah, because I was in Miami. The deal is in Orlando. The buyer is in the UK. The seller is in Utah. And
Gosh.
I was like, if all I had to do is connect and be this like focal point and I
Yeah.
can make money. So the deal closed and like that alone was enough for me to be satisfied. And the money was just the icing on the cake. I was like, all right, I'll figure out how to use contracts next.
Right. Yeah. Definitely something you'd recommend that people know how to do. But that's awesome that it worked out so well
Yeah.
and if nothing else, it gave you that understanding, that tangible proof that you can do it.
Yeah. It was me flailing forward.
Yeah.
Because the contracts, like I was so new that I had no clue how to do the contract. I was like, but I'm not gonna like stop me from like, trying this experiment. I was like, if it wasn't a mutual friend that we had, like from church, I probably would have been a lot more hesitant.
Yeah.
But I was like, yeah, I'm gonna go for it.
There you go. That's it. Taking action without knowing what you're doing. That's exactly what Flailing Forward is. So, perfect. What about the house that you bought? You still own it? That first one?
Yeah. Yeah, and it's actually pretty funny. It's another flailing forward. It's not a great deal at all. Like it's
Yeah.
mediocre.
Yeah.
It's a long-term play. It's 10 minutes from Disney, but it
Uh-huh.
breaks even. It has a mediocre interest rate. It's nothing fancy at all. But the contractor that I got or I met from that deal, he helped me tackle multiple co-living deals.
Okay.
And because of that, I was able to get in those terms as well with those first two co-living deals with my broker. He's the money partner.
Hmm.
Terrible terms, failing forward again, but the contractor from the property and then those two deals basically turned into me teaching co-living inside of sub two. So it was
Amazing.
like this massive action, and yeah, they were very key components for allowing to build enough co-living properties to be able to teach it.
Yeah. That's incredible. And that was the contractor on this home that you bought? That was the connection
Yeah.
there?
So the contractor, he was really good. He helped with some of the things on the first Disney property.
Hmm.
And then because of we had that relationship with him already, we felt comfortable buying a handful of co-living deals in Central Florida and
Yeah.
rehabbing them with him.
Gotcha.
And yeah, he did great. And yeah,
Man. So did you go straight from that Orlando property into co-living, or were you buying more single family homes first?
We had bought a couple single family homes regular.
Hmm.
But yeah, I mean, I just have a few regular rentals, and then now we only buying co-living.
Okay. So you made the transition pretty quick from just normal single families into co-living.
Yeah, and part of it, a lot of it is I've lived technically in five different co-living, like undergrad mostly.
Uh-huh.
And so like ranging from St. Louis, Missouri to I've lived in co-living in the Mediterranean, Cyprus, below Greece,
Hmm.
to I went to undergrad at BYU Hawaii co-living.
Hmm.
And so I'd lived in a variety and I was like, yeah, I understand this model. There's a demand.
Yeah. Yeah, it's really funny. I think anybody that's lived or traveled extensively overseas understands that co-living is something that's pretty common everywhere but here. And
Hmm.
it seems like we've been kind of hesitant to get into co-living in the States. But it's something that's seeing a lot of growth right now.
Yeah. Yeah, it's like when you, especially when you go to like Asia. I
Yeah.
mean, I one that was one of the other places I lived in co-living for a summer was Tokyo,
Uh-huh.
and it's like the cost of living there's crazy, and it's everyone is co-living to some degree.
Yeah. Yeah. No, that's awesome. And so you had the experience with it. What made you decide to jump into co-living back home? You're buying these single family homes. What made you decide to make that shift again?
So someone at a meetup I met a few weeks after brought me a deal that was in Orlando, and it was a foreclosure,
Hmm.
and it I showed it to my broker. And I was like, I thought we were gonna flip it, just a normal flip. Had a
Yeah.
lot of equity, and he had just got back from like the Bigger Pockets conference in Cancun that year. It was like Padsplit was a big sponsor, and
Yeah.
he comes back, and I'm like,
Pad
"Hey, Jim."
Padsplit is a co-living operator, basically. They manage co-living properties for people, right?
They're more like the marketing arm, like they help
Marketing
fill
arm.
it.
Okay.
Yeah,
Yeah,
they
there we
fill it. And so I showed it to him. He's like, "We're gonna turn it into a Padsplit." I was like, "What are you talking about? What is that?" He's like, "Rent by the room," and I was like, "All right." And so it was, yeah, perfect area. It's near the Orlando airport. And yeah, that was technically the first one. It was a little
Okay.
over 2 years ago.
Had he done one before?
No,
So you both just
he's
kind of jumped in
Taipei.
this. Yeah, okay.
He's very like he owns over 20 Airbnbs. So
Uh-huh.
like he's comfortable enough in the real estate place, and we funded it with his, I think, self-directed. And so we're like, all right, we're all, but the third business partner, the one I mentioned at the very beginning that got me into real estate, him and I were both pretty skeptical.
Yeah,
We're like, I understood it when you're near a college for sure, no question.
sure.
But in general, I was like, well, where's the school? What? But it's always filled. It's never empty.
Man, amazing. So you guys decided to just take a leap and jump into that one because you'd heard about it at a conference, which is great. Did you use Padsplit to market and fill it
Yep, yep.
on that
And
one?
because PadSplit, they're basically analogous with Airbnb,
Hmm.
but specifically for rent by the room. So like Airbnb fills it, but they don't really do much else, right? They'll help
Yeah.
vet maybe.
Yep.
And so yeah, we all the coding that we're doing currently, it is with PadSplit.
Okay. Nice. Awesome. That's been a good relationship for you guys, it sounds like. Did you have to like change the layout or anything for that first co-living property?
Yeah, so like the typical buy box, the ideal, like if you're converting, like we only do new construction right now, but if you are converting, I'd say the ideal buy box is like a 4 bed, 3 bath, 2,000 square foot. And then usually you can turn that into like an 8-3 or a 9-3. So you're
Wow.
getting rid of the living room because the living room just causes problems.
Yeah.
Um, Often converting the garage typically
Mhm.
into 2 rooms. We often, not always, but we'll turn the master bedroom into 2 rooms.
Mhm.
And so yeah, like 8-3, 9-3.
Okay. So that that first one you guys bought, what was it originally?
So when we bought it, it was a 5.3,
A 5.3. And what did you convert it to?
8.3.
8.3. That first one you bought, he's heard about it at a conference, and I guess the idea was already you already knew you needed to add more rooms, right?
Hmm.
Was there ever an issue with the city of we're taking this single family home, we're adding a whole bunch more
Yeah,
rooms, we're now
that
putting
first one.
non-related individuals in there? Like what happened with all that?
Yeah, so we've only had it happen once, and naturally, it's the first property.
Yeah.
Um, the big rule, and typically anytime this happens, it all boils down to parking.
Yeah.
And so the neighbor reported us as an illegal Airbnb. We get a notice on the door, like all that. Long story short, because we did work with Padsplit, they have a certain like proprietary lease agreement that they use.
Uh-huh.
So technically, the people staying in it, they're not tenants, they're members
Okay.
of this LLC that has a master lease with the owner. It's all
Okay.
semantics, really.
Yeah.
And because of that, though, we just showed it to the city, and they basically just backed off. And so now we do control the parking more than we did before.
Okay. Interesting. Okay. So was that something you had even considered before, like going into this thing? Was that a thought on the, did you know that you might have to deal with that at some point?
I mean, I've heard of it, but I did not expect it to be that fast.
Yeah. Yeah.
But
That's,
it's every story I've heard like that, it's the same thing. It's parking. So
yeah.
it's like either you have enough parking at the property or you limit it to the first come, first serve, 4, 5, 6 spots type thing.
Gotcha. Okay. That's great that the city didn't have an issue with everything once you showed them, the lease. They kind of backed
Mhm.
off, which is, you know, who knows if every city does that, but have you had that issue with any of your other properties in other states or anything?
No, no. So we have co-living in Florida, Atlanta, and Houston.
Okay.
And yeah, just one incident.
Wow, that's great. So you started off in Florida. How did you pick your other markets for co-living? What made you decide to branch out of Florida?
So Houston or Atlanta was more of a one-off. It was because it was already existing co-living. I guess a very simple transaction. It had already been operating 3 years. Um, Tired landlord basically.
Yeah,
He didn't outsource the management, and anytime I see people do not outsource, they try to save a couple bucks. It's like the fast track to tired landlord.
yeah,
But Houston we really, really like because or a few reasons. The first is it's one of their biggest markets, Padsplit.
uh-huh,
So it's very, very known, established. The second, and probably actually the most important, is most of the country they have restrictions on the number of unrelated people that can live together. So
yeah,
like I think Phoenix is like 6, maybe 7. A lot of places there on the country they're like anywhere from 4 to 6.
yeah.
And so Houston though, it's the Wild West. They do not have restrictions. So like they're welcoming it. So
Okay,
we have 3 10 10s that are they're in different phases. Like one is completely done, two are in the middle of the process, and then right now we're raising capital for a 2020.
yeah,
And it's all because of just from a risk profile. It's like the city knows what we're doing, the county, everyone is very aware. Like they see the plans. We're not modifying anything after the plans or the
mhm,
build, none of that. And yeah, no restrictions on the number of unrelated. So we're like, all right, here we go. And then as a byproduct, we get to influence the comps. We're like
mhm.
essentially creating our own comps.
Gosh, that's great. Now in Houston, you guys are doing something different though. The other ones that you bought them existing and can maybe did some conversion on them, but in Houston, you guys are building new, right?
Yeah, so most of them were just buying dirt and then building. One, we've done a tear down and
Hmm.
then building.
Okay.
But yeah, we're staying in, I don't know if you're familiar with Houston, but there's a 610 circle, like a bullseye around Houston, and we're staying within that.
Okay. Why the new build versus buying and renovating?
Um, well, it first started, we wanted to build, to force appreciation.
Hmm.
So it's like we could buy the land, build, and then the ARV is there's a gap.
Yep.
Um, the second part was just the quality. We really liked being able to provide because everyone has their own bathroom in these.
Yeah.
And so we're not it's not full blown luxury co-living. We're a notch below. We call it premium. So it is a quality, like it's not a studio. It's this unique gap in the market we found.
Hmm.
Where like if someone rents a studio in Houston, depending on the part, call it 2 grand or something, a
Yeah.
little more, and they have to go get utilities.
Yeah.
Where with us, it's like high 200s, like 290 per week, fully
Hmm.
furnished,
Hmm.
utilities included.
Hmm.
So it's like half. So it's like this unique. So we wanted to build because we saw that gap. We could like, fill that gap of demand.
Yeah.
And yeah.
Man, that's so good. I mean, what a great lesson of, keep your like you noticed something that was missing and you figured out a way to fill it. And that's where like the real need is in figuring out where those gaps are and coming in and filling that and being the first one in there, especially. That's huge for you guys. That's just a way to skyrocket what you're doing.
Yeah, and the other big anchor in terms of like demographics, because it is like in co-living, you'll get a wide range of demographic depending on the quality and the price point.
Yeah.
And so we could filter naturally higher quality, higher price point, that demographic. But the two anchors are we're just a couple miles away from Texas Medical Center.
Hmm.
I'm sure you've heard of it. It's the largest in the country.
Yep.
They have over 100,000 employees. Then
Yep.
two of the properties are like 2.3 miles from it.
Oh, wow. Okay.
So
That's really close. Do you
there's a
have
variety.
do you
Yeah.
have any medical professionals staying with you in your co-living?
Well, so the first one that we built, it's going live either this week or next week.
Okay.
And so the two others, they're midway, mid
They're on their way.
process,
That's right. Yeah.
but that's the intent. Because the other anchor is University of Houston, which is
Uh-huh.
50,000 students. It's also about 3 miles away.
Man, that's great positioning. That is like prime location on all of those.
Yeah, so we're like, so that's actually what naturally caused us to escalate to. We probably won't do any more single 1010s.
Uh-huh.
Like now we're just buying a bigger lot, subdividing it, and then building two directly next to each other.
Okay.
So it it's a 2020, technically two buildings, but they share the same driveway.
Yeah. So what do you look for in a property for a co-living? What kind of area and stuff and what kind of amenities are you looking for when you're buying these properties?
Yeah, so the big thing, we had more macro perspective. We try to stay pretty close to the big metros.
Hmm.
Um, Padsplit, they do charge a fee, right? But they're pumping a lot of that money into um like Google ads and stuff.
Hmm.
And so they're doing it only in most of it is near these like 20 core markets.
Okay.
So that's the first box. Are you close to where Padsplit is spending 6 figures every month on marketing?
Yeah.
If you're not, you're swimming upstream. So that's
Yeah.
the first one.
Well, and
Um,
you're not paying them until somebody's in the property, right? So they're doing marketing for you before you even have to pay them.
yeah,
Yeah.
yeah, exactly. So that's the first one. The second, we narrow in more on jobs, like who are the big jobs. So we talked about the medical center, and not like, universities count that as well. Like who's the demographic?
Hmm.
It needs to be very clear instead of just like hoping that it's just a bunch of mom and pop retail that are the jobs.
Yeah.
So after that, maybe it's an Amazon fulfillment center, like that type of thing.
Hmm.
So next is we're looking for Class C neighborhoods. So like, they've been around a while. There's not an HOA,
Right.
emphasis, underline, bold.
Yeah.
Some people try to force it, but the reality is HOA can vote and change their rules at any time.
Yeah.
And so that's the next box is like a transient neighborhood, Class C. So like 50% of it is probably rentals.
Hmm.
It's not a bunch of it's not 90% owned by homeowners and they're going to get mad about, you know, all the cars. And
Right.
So other than that, it's just the bed bath ratio, square footage, making sure like the max bed bath that you want to do is a 4 to 1.
Okay.
Um, 3 to 1, of course, better, but ultimately we love the 1 to 1.
Yeah. Yeah, I feel like that'd be a little bit more in demand. People like having their own space, their own stuff.
Yeah, because the average in this right before this call, I was talking with my partner. She works for Padsplit.
Uh-huh.
The average demographic of the person that is in a Padsplit room or home is a 36-year-old single male.
Interesting. Okay.
And then half, in general, half of the people that have a property on Padsplit or stay in one, half have a car.
Hmm.
And so,
So
yeah,
public
that's,
transportation is important.
yeah, that's the next box is just making sure that, yeah, you're near public transport.
Yeah, gotcha.
If you follow all that, like to recap, core metro,
Yep.
um, like transient, there's jobs, no HOA, and bus stops. Like it's like 95% of the recipe right there.
There you go. With multiple single 36-year-old males living in a house together, you ever run into issues with your tenants and personality conflicts and disagreements and things like that? How do you handle that?
So the other big reason that we do Pat Split, so we have a full team. There's 10 of us,
Uh-huh.
and I'm on solely on the front marketing arm. But the way we built it is so Pat Split, we have multiple layers between the tenant and then us. So like layer one is pad split, where they'll do a background check, credit check, all that. So
Yep.
that helps filter. And then if they do qualify, then we always hire a property manager who
Okay.
is the one that is direct communication with any of the tenants.
Is that an in-house property manager, or are you finding property management companies that will manage rent by the room situations, co-living situations?
So yeah, local. So
Local.
that's
Okay.
also part of the big benefit of staying within those 20 core markets is because they are so known there, Pet Sweat.
Yeah.
There's there's contractors, property managers that are already very familiar with it.
Gotcha.
So 2 layers, right? Pat split between us and the tenant, then the property manager, and then we have one person on our team that we call the asset manager, who's the point of contact for all property management.
Yeah.
But in reality, the property manager handles 95% of any issues that could happen.
Right.
And then we have the SOPs built where it's like, all right, if it's outside of the SOPs, then the property manager brings it to our asset manager.
Gotcha. So I mean, at this point, you're pretty much shielded from having to deal with any of that. You're not taking middle of the night calls about issues.
Yeah, and really the only time we have to talk with the property manager is like an expense that's above normal, like a water heater type thing.
Yeah.
Other than that, yeah, it's the property manager spearheading it.
Incredible. That's great. Was there ever a time when you made the jump from single families to co-living, and then you went from from buying and retrofitting properties to building new co-living at a larger scale? Was there ever a time where you thought to yourself, what am I doing? Is this too big or was it just guns blazing, full steam ahead?
It ebbs and flows. Because it's like no matter what you do, there's always problems,
Yeah.
right? Like everyone has problems. It's impossible just not have problems in this life.
Yeah.
And so we found just keeping a moderate pace, like not too fast, not too slow,
Hmm.
helps keep those lows from feeling too low.
Yeah.
Um, I mean I've always been pretty interested, so I haven't seen a lot of it as work. Like it's always been like a chess game to me.
Yeah.
Like on my whiteboards, I see, all right, this many rooms, all my expenses are covered at double.
Yeah.
So now it's like this game that I'm playing mostly. I mean, the hardest part in terms of any issues we've had actually is the lending,
Right.
getting the loans to build these. It's
Yeah.
doable, but it is the hardest part. And
Yeah.
so anytime we get frustrated, that's typically what it comes to.
Yeah,
We just have to find a new lender. Yeah.
I was going to say, I would imagine you're probably using a combination of some traditional like construction loans and lending as well as some private lenders. Is that right?
Yeah, so when we do our capital raises, like now we're doing that 2020 capital raise, we'll raise equity
Yep.
and then we do that so they're truly equity partners and then we'll just buy the land outright cash.
Okay.
And then we still have enough capital to do the down payment on the hard money.
Gotcha. Okay. So you're doing a capital raise right now. If anybody's interested in co-living and in being part of that and in learning as they go, what first off, how can they get a hold of you to be part of that? And secondly, what can they expect as an investor in one of your deals?
So I already bought this, so you can't buy it. It's buydealswithdustin.com.
Oh no. I think mine is due deals with Dustin actually.
Oh, okay. Yeah,
Yeah.
I have that domain and it goes to my link tree and then depending on what I have going on, I'll just update my link tree.
Okay.
And so yeah, buydealswithdustin.com and then we show them everything. Right now we're saying the people that invest 20K and above, we're
Mhm.
gonna fly them out to Houston with us to look at not just that property but our whole portfolio. We're gonna spend a day together, just big field trip basically.
Yeah.
And then outside of that, they get an update every Friday. It'll
Hmm.
show photos and then a brief explanation of what's going on. And
Okay.
then every Thursday, 4 to 5 p.m. Eastern, we do office hours just for the investors.
Okay.
And we'll look at the deals we're doing together. We'll underwrite deals that they're interested in buying. We'll talk about how to raise capital, like anything really that they want to talk about. So
Amazing.
yeah, it's a lot.
I mean, it's like a full-blown education. It's like a semester in its own for your investors that, they're getting so much given back to them in addition to the monetary value, but the skills and the knowledge that they're getting, I mean, is every bit as good as any money they'll make off of doing these deals with you. That's great.
Yeah, because a lot of them, like we do want them to, you know, go do stuff on their own as well. So a lot of them, they'll come every Thursday with property. Just say, hey, what do you think of this? And then like Audrey from Padsplit, she'll be on it with us. Our project manager, the guy that got me into real estate, he'll be there. I'll be
Mhm.
there, and we all look at it and then just give them like direct feedback.
Amazing. That's awesome. Buydealswithdustin.com. Yeah. So for
Hmm.
anybody that wants an education and a return on your investment, buydealswithdustin.com. Get into co-living. That's awesome. Um, just to wrap it up, over the years of experience that you've had going from different things, different investing ideas and methods and things like that, are there any pieces of advice, any lessons that you've learned through your journey that you would share with people that are looking to get started or jump in?
I'd say it's right on par with the name of this podcast. It's Flailing Forward.
Yeah.
I found the two things I found were the more action I take, the luckier I get. And then the more I narrowed my focus, the luckier I get.
Yeah.
Like just especially with the wholesale, but also the co-living, I'm like, all right, this is it. I'm gonna apply all of my energy. Like I'll do other things, but that's like the bulk.
Yeah.
And yeah, just consistent, massive action.
Yeah. That's great, man. Yeah, I think, and your journey has really shown that too. Every step that you've taken has led to something good, even though there was some lessons to be learned along the way. I love when you're talking about your early journey and you got into a couple deals that were not home runs, but what they were is they were momentum starters and they got the ball rolling. And through those deals that may have had a higher interest rate or whatever, you met connections that led to the home runs down the line. It's like getting a couple base hits so that later in the game you can put one over the wall and run the bases. So great advice, great points. Really appreciate it. One more time for anybody that wants to get a hold of you, is the best way just your website, or if they have questions or anything, is there another way for them to contact you?
Yeah, the best way it is buydealswithdustin.com, but when you go there too, I have my Facebook handle, like the link, Instagram. You can shoot me a DM on either of those as well.
Okay, perfect. Awesome. Well, thank you so much, Dustin, for joining us today. Guys, get out there, do some flailing. take some action, make some progress. It's not smooth. It's not pretty when you start. You may be looking like you're on ice skates, but flailing moves you forward. And as you can see from Dustin's journey, good things come from it if you're taking action. So until next time, we'll catch you later. Oh, let's see.